right, ready to dive into Unshakeable?
Let's do it.
This book by Tony Robbins, it's got everyone talking, from big-time investors like John Bogle to folks just trying to, well, make their money work better for them.
Absolutely. And I think that's what makes Unshakeable so interesting. It's not just about like the technical stuff of investing.
Right, right.
It really gets into like the psychology, our emotions and how they can totally mess things up when it comes to money.
Yeah, that makes sense. I mean, we've all made those impulsive decisions, haven't we? Bought something we didn't need or sold a stock out of fear.
Exactly. And that's what Robbins tackles head on. He shows us how to develop that unshakable mindset so we can make smarter choices, even when the market's going crazy.
So it's about more than just picking the right stocks.
Oh, way more. Think of it like this. You could have the perfect map, right? But if you're constantly doubting yourself, taking detours because you're scared, you'll never reach your destination.
Okay, that's a great analogy. So how does Robbins define unshakable when it comes to, well, our money?
It's about having this like inner confidence, not being naive to the risks, but understanding them, managing them, and not letting fear be the one calling the shots.
But the market does have those scary moments. How do we avoid getting swept up in the, panic?
One of the most powerful things Robbins says, focus on what you can control. You can't predict what the economy is going to do or what the market will do tomorrow, but you can control how you invest, the fees you pay, and how you react when things get volatile.
So instead of trying to, time the market, we should be focusing on building a solid plan that can handle the ups and downs.
Exactly. And that starts with understanding some basic investment principles. Luckily, Robbins breaks it down in a way that's actually, easy to understand.
Yeah, sometimes this stuff can feel like a foreign language.
I totally agree, but Robbins does a great job of making it accessible. He lays out those core principles without getting lost in the jargon.
Okay, that's reassuring. So where do we start on this journey to being unshakable?
One of the first things Robbins tackles is this idea of loss aversion. Ever sold a stock because you were freaking out only to watch it go up later?
Ugh, yes. It's like you feel so smart at the time, but then regret.
That's classic loss aversion. It's the psychological quirk where the pain of losing, it just feels way stronger than the happiness of winning, even if it's the same amount.
Interesting. So how do we, fight against that?
Well, the first step is awareness. Once you see how this bias can trip you up, you can start making more rational decisions.
Okay, yeah, that makes sense.
Robbins also talks about the importance of taking a long-term view. The market's going to fluctuate, that's a given, but if you're in it for the long haul, those short-term dips become less scary.
So it's about focusing on the marathon, not the sprint.
Absolutely. And to illustrate this, Robbins tells this great story about two guys, Joe and Bob.
Okay, I'm listening.
They both invest the same amount of money. Joe starts young at 19, invests for 8 years, then stops. Bob starts later at 27 and keeps going till he's 65. Guess who ends up with more?
I'm going to guess Joe, since he started earlier, even though he invested for a shorter time.
Exactly. Joe ends up with way more thanks to the power of compounding. It's like that snowball rolling downhill, right? It gets bigger and bigger over time.
I love that visual. So even small amounts invested consistently, especially early on, can really make a big difference.
A huge difference. Robbins' point is, you don't have to be a financial whiz to build wealth. Starting early and letting compounding do its thing is one of the most powerful strategies out there.
It's like planting a financial seed and watching it grow into a mighty oak tree.
I love that. And speaking of things that can stunt your financial growth, Robbins also talks about another big pitfall: fees.
Ooh, yeah, those pesky fees. We all know they exist, but Robbins really shines a light on how much they can eat away at our returns.
Absolutely. And the scary part is a lot of people don't even realize how much they're paying. They're hidden in the fine print, tucked away in those long, complicated documents.
It's not just those big management fees everyone talks about.
Nope, there are all sorts of hidden fees that can really add up, especially over time. Robbins even shares a story about finding crazy fees in his own company's 401k plan.
Wow, that's eye-opening.
It really highlights how important it is to, become a savvy investor, understand what you're actually paying for.
So knowledge is power when it comes to fees, right?
Absolutely. Unshakeable is all about giving you the tools and knowledge to navigate the financial world with confidence without being taken advantage of. It's about understanding the rules of the game so you can, play it to win.
So we've talked about mastering our emotions, the power of compounding, and being fee-aware. What's next on this path to becoming unshakable?
Now that we've got our heads in the right place, it's time to talk strategy. Next up, we'll explore Robbins's core 4 principles. It's a framework for building a portfolio that can handle those market storms and help you reach that lasting financial freedom.
Okay, I'm ready to get tactical. Let's dive into those core 4 principles and see how we can apply them to our own lives. Okay, we're back. Ready to dig into those core 4 principles from Unshakeable. I'm feeling pretty pumped to build a portfolio that not just survives, but actually thrives. Even when a market, well, throws a tantrum.
Yeah, that's the goal. And Robbins, he lays out a pretty clear path to do just that. He starts with this concept called asset allocation.
Okay, asset allocation. Break that down for me.
Think of your portfolio like a superhero team.
All right, I like where this is going.
Right. You need different strength, different powers to take on whatever the market throws your way. And asset allocation, that's how you assemble your team of superheroes.
Makes sense. So how do we choose the right assets for a portfolio?
Well, it depends on your risk tolerance, like how much risk you're comfortable with, how long you plan to invest, what your goals are. Are you saving for a down payment on a house or thinking more long-term like retirement?
So there's no one magic formula that works for everyone.
Not really. It's all about, tailoring your portfolio to your specific situation. But that's where the core 4 come in. They give you a solid framework to build on.
All right, lay it on me. Principle number 1.
Don't lose. Simple, right?
It sounds simple, but
It's like the foundation of your superhero lair. Gotta be strong.
okay, I can see that.
Robbins and other big investors like Warren Buffett, they really emphasize protecting what you've got as like a top priority.
Okay, but how do we actually do that? Isn't investing all about taking risks to some degree?
Sure, but there are smart risks and not so smart risks. Ramesh talks about finding investments where it's, well, almost impossible to lose money. It's okay to maybe miss out on a few stocks that go through the roof if it means avoiding those big crashes that can wipe you out.
Makes sense. So principle 1 is all about defense, protecting what we've got.
Exactly. And that leads us to principle number 2, asymmetric risk reward.
Asymmetric risk reward. Catchy. What's that all about?
This is where we build our offense, but strategically. We're not just swinging for the fences with every investment. We're looking for those opportunities where the potential wins are way bigger than the potential losses.
So we're tipping the scales in our favor. But how do we find those magical opportunities?
It takes some research. Got to understand your own risk tolerance. But Robbins gives us some real-world examples. He talks about investing in first trust deeds, basically a type of real estate loan. And the risk of losing money was super low compared to the potential gains.
Okay, so principle 1, protect our base. Principle 2, find smart ways to grow from there. What's next?
Principle number 3, tax efficiency. It's like a secret weapon, can really boost your returns without breaking a sweat.
Taxes. Not exactly the most exciting part of investing.
I hear you, but Unshakeable really emphasizes how crucial it is.
Right.
It's easy to forget about, but minimizing how much you pay in taxes, that can make a huge difference over time. Remember, it's not just about how much you make, it's about how much you get to keep.
Good point. Any tips for being more tax efficient?
Robbins gets into specifics, like using those tax-advantaged accounts, your 401k, IRAs, holding investments for the long term to reduce those capital gains taxes.
Okay, I'm taking notes. This is the kind of practical advice I was hoping for. All right, hit me with that 4th and final principle.
The classic diversification. Remember our superhero team?
Yeah, gotta have a diverse squad.
Exactly. Diversification means you've got different powers, different strengths to handle whatever the market throws at you. You don't want to put all your eggs in one basket. What if that basket, takes a tumble?
Right. Spread that risk around. But how much diversification is enough? Is there like a golden rule?
Robbins, along with experts like David Swenson, they like a balanced approach. A good mix of stocks and bonds, leaning a bit more towards stocks for that long-term growth. And then you can explore some other asset classes like real estate or commodities. Depends on your risk appetite and those goals we talked about.
So, core and explore. I like that. Build that solid foundation, then branch out strategically.
Exactly. And even within each asset class, you want to keep diversifying. Don't just bet on 1 or 2 stocks. Go for a broad market index fund. Those track hundreds, even thousands of companies.
Okay, starting to see how these core 4 principles, they really do create a resilient strategy. It's not about trying to outsmart the market or pick the next hot stock, but about building that solid base that can handle the ups and downs.
Absolutely. And Robbins, he's very clear that these are principles, not rules set in stone. You got to do your research, figure out your own risk tolerance, maybe even talk to a financial advisor to make a plan that's truly personalized.
Which brings up a great point. How do we find an advisor we can trust, who's really looking out for our best interests? The financial world can feel, well, a bit like a jungle sometimes.
You're not wrong. And that's exactly what we'll tackle next. Robbins gives us some great insights into the different types of advisors out there and how to pick one who's truly on your team.
Okay, we've talked mindset, we've talked portfolio building, but there's one big piece left right. Finding the right financial advisor.
Yeah, that's key. And for a lot of people, it can be the most intimidating part. So many options,
Yeah.
so many different, types of advisors out there.
Exactly, like who do you trust? Who's actually qualified? It feels like you're trying to choose I don't know, a financial doctor, but you're not even sure who went to med school.
Robbins, he gets that. And he really dives into this challenge, gives us some, I think, really valuable insights into how this world works. First, he helps us understand the different types of advisors out there. You've got your brokers, independent advisors, duly registered advisors, and their roles, their incentives can be pretty different.
Okay, so not all advisors are created equal. I kind of had a feeling about that.
Nope, not at all. And one of the biggest things to look for is something called the fiduciary standard.
Fiduciary standard. All right, tell me more about that.
Basically, a fiduciary advisor, they're legally obligated to put your interests first. Like it's the law. Think of it like, a doctor who's sworn an oath to help you, not just sell you whatever brings them the biggest commission.
Okay, that makes a lot of sense. But how do we know if an advisor is truly a fiduciary? Can we just take their word for it?
Robin says, don't be afraid to ask tough questions like, are you a fiduciary? Will you put that in writing? That can help you weed out the ones who, well, might not have your best interests at heart.
So be proactive, do your due diligence.
Exactly. And Robbins also talks about how important it is to understand how an advisor gets paid. Are they fee only, meaning you pay them a flat fee for their services?
Right.
Or do they get commissions on the products they sell?
Oh, I see. So there could be some conflicts of interest there.
Potentially, yeah. Robbins really recommends looking for fee-only fiduciary advisors whenever possible. That structure just makes it more likely their incentives are aligned with yours. They're focused on helping you reach your goals, not just lining their own pockets.
Okay, that's a really important distinction. I'm learning so much from this book already.
Me too. And even with the right advisor, Robbins reminds us that real financial freedom, it goes beyond just the numbers.
Right, right. In that last chapter, he really shifts gears, talks about real wealth. What's that all about?
It's about aligning your financial goals with your values, with your purpose. Like, what do you actually care about? What kind of life do you want to live?
Okay, yeah, that makes sense.
Yeah.
But how do we connect money with, those bigger questions?
Robbins tells this great story about spending the day with his friend Steve Wynn. The casino guy. He bought a Picasso painting for like $86.9 million.
Whoa, that's a lot of dough for a painting.
Right. And Robbins uses the story to show how, well, value is really subjective. What one person thinks is priceless, someone else might think is just, a bunch of random shapes on a canvas.
It's all about perspective.
Exactly. And real wealth, it's about figuring out what's truly fulfilling to you, what aligns with your values, what gives your life meaning, regardless of the price tag.
So it's not about keeping up with the Joneses or chasing some arbitrary number, but about designing a life that, actually reflects what matters to us.
I love that. Robbins talks about two key principles for achieving this kind of, well, real fulfillment: continuous growth and giving back.
Okay, tell me more about those.
Continuous growth means we're always learning, always evolving, pushing ourselves outside our comfort zone. That kind of growth, it's crucial for happiness, even when we achieve financial success.
So it's not like you reach financial freedom and then, bam, you're done. It's an ongoing journey.
Exactly. And giving back, it reminds us that true wealth, it's not just about what we accumulate, but about what we contribute. It's using what we have, whether it's time, money, our talents, to make a positive impact on the world around us.
Like shifting from that scarcity mindset to one of abundance, realizing we have enough to share, and that giving, it actually enriches our own lives in the process.
Beautifully said. And Robbins emphasizes we don't have to wait till we're millionaires to start giving. We can start today with whatever we have, whether it's a small donation to a cause we care about, or just, helping a neighbor out.
It's about cultivating that spirit of gratitude and generosity.
So there you have it. Our deep dive into Unshakeable is complete. We've talked about mastering our mindset, building a solid investment strategy, finding the right advisor, and ultimately defining what real wealth means to us.
This has been such an insightful conversation. Unshakable isn't just about building financial wealth. It's about building a life of purpose, meaning, and lasting happiness. It's been a fantastic deep dive.
Absolutely. And remember, financial freedom, it's not just about numbers. It's about aligning your money with your values, using it to make a positive impact, and creating a life that truly reflects who you are and what you believe in.
Thanks for joining us on this journey. We encourage you to check out Unshakeable for yourself and see how its insights can transform your own financial path. Until next time, keep seeking knowledge, keep challenging those assumptions, and keep diving deep.